Well, some of our businesses don't need capital at all, or need so little that it doesn't make sense to build it into a formula. So we have certain businesses, those are the best businesses, incidentally, that take essentially no capital, because it means that if you double the size of the business, you don't need any more capital. And those are really wonderful businesses, and we got a few of those. But where our businesses do produce capital, we could have all kinds of complicated systems and have capital budgeting groups at headquarters and do all kinds of things. But we just figure it's simpler to charge people a fair amount for the money and then let them figure out, whether they really want to buy a new slitter or whatever it may be in their business. And it varies a little bit. It varies on the history of when we came in. It varies on the interest rates of but we generally will be charging people something in the area of 15% in terms of working out compensation arrangements for capital. Now, 15% pre-tax, depending on state income taxes, is only 9 to 9.5% after tax. So you can say that isn't even enough to charge people. But we find that 15% gets their attention. And it should get their attention, but it shouldn't be such a high hurdle rate that things that we want to do don't get done. Our managers expect to be running their businesses for a long, long time. So we don't worry about them doing something that works for them in the next year but doesn't work 5 years out, or vice versa, where they don't make longer plans, because they see themselves as part owners of the business. But we want them to be owners with a cost attached to capital. We think it's awful, frankly, the way businesses reward executives with absolutely no regard for the cost of capital. I mean, a fixed price option for 10 years, imagine giving somebody an interest-free loan for 10 years. You're not going to do it. And if a company is retaining a significant part of its earnings, and you give out a fixed price option for 10 years, they can do nothing with it but put it in a savings account, and they'll make some money off of it. So we like attaching a cost to the capital. If we had options for me and Charlie at Berkshire, which it's not going to happen, but it would not be illogical. It would not be illogical. We have responsibility for the whole place. You could have some kind of a compensation arrangement that worked in respect to how the whole enterprise fared, and it would make sense for the two of us. It wouldn't make sense for the rest of our managers, because they work on specific units, and you should have compensation arrangements that apply to those units. But assuming you had it for the two of us, which we're not going to have, I want to assure you. But we would say the fair way to do that would be to have an option at not less than present intrinsic value. Forget what the market price is, because believe me, the idea of having the more depressed your market price be, the better your option price be, does not make any sense. So we would have it at not less than intrinsic value. And then we would have it step up yearly based on something relating to a cost of capital, because we would say, why should we get free use of the shareholders' capital? And we could work out a fair stock option. That would be perfectly appropriate. We won't do it, but it'd be a perfectly appropriate way to have us compensated, that involved an issuance, that an initial price of not less than intrinsic value, and involved carrying costs. And then we would be in a position, still not totally analogous to shareholders, because we wouldn't have a downside that you have, but we would at least have the carrying costs that you have of ownership. And we work that through into our unit compensation plans by having a cost of capital that, like I say, tends to run about that 15% area. And if people can give us money, we should be able to figure out a way to do something better than 15% pre-tax with it. That's part of our job too. So we will pay them to give us back money.
Well, we really invented a more extreme system, and that is the executives can buy Berkshire Hathaway stock in the market for cash. And this is a very old-fashioned system, but most of them, it doesn't take any lawyers or compensation consultants, and most of them have done it, and most of them have done very well with it. I don't know why it doesn't spread more.
Oh. People say they want their management to think like shareholders. Management, they compensate. We're going to have them think like shareholders. It's very easy to think like a shareholder, become one,
Yeah.
And you'll think exactly like a shareholder.
Right.
It's not a huge psychological hurdle to get over if you actually write a check.
Yeah.
Zone